Hi, my name is Karen Jones, content creator for the Society of Technical Analysts, and today we're looking at the daily S&P chart, and in particular the 200-day moving average, which is this turquoise line. Now, if you didn't know anything at all about technical analysis and all you looked at was price and the 200-day moving average, you could actually come up with a fairly conclusive trend-following system. To wit, while we are above the 200-day moving average, i.e. the turquoise line, you're in a bull trend. So from 2020 right up until 2022, that served you well. And then when you started to oscillate around the 200-day moving average, that's when the trend started to change. And then as soon as price headed below the 200-day moving average, and it started acting as resistance, you were in fact in a bear trend. In this period here in 2023, you can see that price is again oscillating around the 200-day moving average. And that is also telling you that the trend is changing again. So from around 2023, we start to stay above the 200-day moving average. We have a brief blip below it, but you will see that it immediately rallies sharply higher through there. Let's have a look at today's price action. So we've been above the 200-day moving average now since November of 2023, and we've stayed above it all of this time, right until March 2025. And then we broke dramatically down from it. We have, as you can see, broken briefly above it. My question that I keep asking myself is, with a market that has performed so well with this 200-day moving average, what does this tell you about the current state of the bull move? Price above the 200-day moving average suggests that you are in a bull trend. However, this break has been short-lived and we're already back at the 200-day moving average. A move back below there, I think, would be pretty negative. And I think it's worth watching, because I think if you break back below this 200-day moving average, which is currently at 5,773, I think that's going to start to look pretty negative. And once you're below the 55-day moving average at 5587, I think it's going to start to look really negative. So I think I would start to watch this 200-day moving average. Either the price will oscillate around the 200-day moving average, or break down from it, or react sharply from it. But unless I see a really strong reaction from this 200-day moving average, I'm starting to view this as quite negative price action. Thank you.